They said he could predict the market years in advance. Not just general trends or rough guesses, exact turning points. Down to the day. And the most disturbing part? He was right. Again and again. In 1909, when traders were still shouting orders in smoke-filled rooms, one man calmly sat at his desk, drawing lines and measuring time. He claimed the market moved not by chance, not by news, not even by economics, but by time itself. His name was William Delbert Gann, the man who turned the clock into a trading system. Now, before you think this is just another myth, think about this. He predicted the 1929 stock market crash, 20 years before it happened. He predicted the 1949 bottom, 4 years before the market even touched it. Over and over, his forecasts lined up with reality like clockwork. Literally. How? That's the secret we're about to uncover. But first, take a second to hit that subscribe button, like this video, and tell me in the comments where you're watching from. Because what you're about to learn might completely change how you see markets forever. Gann believed markets were living things. That every move, every spike, every collapse was part of a rhythm, an invisible pulse that ran through all human behavior. He called it the law of vibration. He said that everything in the universe, planets, weather, crops, and yes, even markets, vibrates at a certain frequency. When those vibrations harmonize, major changes occur. When they clash, trends collapse. To most traders, this sounded insane. But to Gann, it was simple nature. He'd say, the future is just a repetition of the past. The market is not random. It's cyclical because human emotion is cyclical. Fear, greed, hope, despair, they come back again and again. Each generation thinks their time is unique, but they're just playing out the same emotional pattern on a new date. That was Gann's genius. He didn't just study price, he studied time. He discovered that markets move in fixed intervals, like the gears of a watch. Every 20 years, 30 years, 60 years, specific energies repeat. Prices return to their old levels. Patterns mirror themselves. And if you can measure that rhythm, you can know when the next change will come. Think of it like the seasons. You don't need to guess when winter is coming. Time itself tells you. Gann said markets are the same. There are seasons of accumulation, growth, distribution, and decline. They always return, no matter what year it is. But here's where it gets eerie. Gann didn't just talk about general patterns, he gave exact dates. He would mark his calendar months or years in advance. And when those dates arrived, the market would turn. His students couldn't explain it. The newspapers couldn't explain it. But it kept happening. He was once observed by the Ticker and Investment Digest in 1909, making 286 trades in real time. He was right on 264 of them. 92% accuracy. Most of those trades turned at exact time intervals he had forecasted beforehand. No modern algorithm, no AI, just geometry, numbers, and time. So what exactly was he measuring? He believed every market move was part of a circle, a 360-degree cycle. Just like the Earth rotates through 360 degrees every day, he said price and time rotate in perfect geometry. He divided cycles into degrees and used them to forecast future turning points. When price and time squared, when they reached harmonic balance, that's when he expected change. To him, it wasn't magic. It was math. When time is up, he said, change is inevitable. And the deeper you think about that, the more sense it makes. Everything in life moves in cycles. The planets orbit in cycles. The moon pulls tides in cycles. The human body breathes, eats, and sleeps in cycles. Why would markets, which are just human behavior multiplied, be any different? Most traders think in straight lines. They see progress as linear. Gann thought in circles. He said if you plot time around a circle, history doesn't repeat randomly. It repeats geometrically. That's why he used tools like the square of 9, a spiral that mapped time and price as one. When the same vibration returned to its origin point, the market turned. He looked at major market tops, 1907, 1929, 1987, 2008, and found they followed the same time intervals. Roughly every 20 years, fear reached the same frequency. Every 90 years, the same long-term cycle completed. He said these were not coincidences, they were the law. But to understand his method, you need to understand his mind. Gann didn't trade from emotion. He didn't chase breakouts or revenge trade losses. He observed. He waited for time to align. He believed the market's outer behavior reflected the inner state of human psychology, and that time exposed everything eventually. His charts weren't just lines, they were clocks. Every price level represented not just value, but vibration. He'd map 0 degrees to 360 degrees, linking price and time to find harmony. When they aligned, he acted. When they didn't, he waited. And that's something most traders today can't do: wait. The world has changed. Computers, high-frequency trading, algorithms, all of that. But the one thing that hasn't changed is time. The same rhythm that moved the market in 1909 still moves it today. The same cycle of greed and fear still rules. You can hide it behind fancy charts, but you can't escape the clock. Now, most people studying Gann today make a mistake. They look for a formula, the secret angle, the magic number. But the truth is, his system wasn't a mechanical trick. It was psychological. He said a trader must attune himself to time. You can't just calculate it, you have to feel it. You have to become patient enough to recognize when energy builds and when it's ready to reverse. And that's why only a handful of people truly understood Gann. Because his method wasn't just technical, it was spiritual. He said, time is the most important factor of all. Meaning, when your emotions are out of sync with time, your trades will be too. When you're impatient, you'll enter too early. When you're fearful, you'll exit too late. You'll always be offbeat. But when you align with time, everything clicks. You see the turn before it happens. You feel it. He believed success in trading was not just a matter of knowledge, but of rhythm, discipline, stillness. To sit quietly and let the market reveal its timing instead of forcing your will upon it. That's the hardest lesson in trading. Because the market doesn't reward those who want action. It rewards those who wait for the moment of time. And when you start seeing markets that way, everything changes. You stop fighting trends. You stop trying to predict every move. You begin to trade with time, not against it. You begin to see the invisible cycles turning behind the chaos. In the next part of this video, we'll go deeper into Gann's exact time cycle techniques, how he measured 360 degrees of movement, how he used planetary motion not as astrology but as geometry, and how he identified the repeating frequencies that drive every boom and crash. Because once you understand that time is not random, once you see that the same cycle that moved markets a century ago is still moving them today, you'll realize that Gann's method wasn't mystical at all. It was simply human nature, measured in degrees. If you haven't already, hit that subscribe button, drop a like, and tell me where in the world you're watching from. Because in the next section, you'll discover the mathematical rhythm behind every market you've ever traded, and why most traders fail simply because they never learned to count time. And that's where it starts to get strange. Because as Gann students began to look closer at his charts, they realized he wasn't just drawing trend lines, he was measuring time, as if every high, every crash, every turning point in the market was ticking to a hidden rhythm. He believed markets moved in vibrations, just like music, just like planets. To him, price was only half the story. The other half, the one few traders ever notice, was time itself. And here's what makes it even more fascinating. Gann didn't just trade on fundamentals or emotions. He believed that time governs price, and when you learn to read the rhythm of time, price becomes predictable. Not in the mystical sense, but in the mathematical one. He said, when time is up, price will reverse. That was his law. Now imagine this. It's the early 1900s. No computers. No indicators. Just paper charts and pencils. Yet Gann is calling market turns days before they happen. He calls the 1909 wheat top, perfectly. He predicts the 1929 crash, years before it happens. He maps out the 1940s bull run, from a jail cell of geometry and numbers that no one else understood. And people start asking, how? That's where the myth of the Gann cycles began. The belief that time repeats itself in exact, measurable intervals. You see, Gann wasn't looking at the market as chaos. He looked at it as a living organism, moving through natural law. He studied astronomy, astrology, geometry, ancient Egyptian math, not because he was superstitious, but because he believed the same forces that move the planets also move human emotion, and human emotion moves the market. He noticed patterns, certain intervals between market highs and lows that repeated like the beat of a drum. Some were short-term, 30 days, 60 days, 90 days. Others were massive, 360 days, 7 years, 20 years, even 60-year cycles. Every one of them tied to historical turning points, wars, crises, innovations, recoveries. But here's where it gets truly mind-bending. Gann mapped all of it on square charts, not linear ones like we use today. He called it the square of 9. This was his way of translating time into price. It's like he believed time spiraled around price in perfect geometric motion. You'd plot a number, spin the square, and find angles 45 degrees, 90 degrees, 180 degrees, each representing potential reversal points, not just in price levels, but in time intervals. And when those time angles lined up with historical cycles, boom, the market would turn. Now let me make that real for you. Think of Bitcoin in 2017, massive rally, all the way up, then a brutal crash. Fast forward almost exactly 4 years later, 2021, it peaks again. For years. Same rhythm. Same psychological cycle. Different asset, same law of time. Gann would have smiled at that, because he believed nothing in markets is random. He said, the future is a repetition of the past. And if you truly understand that, not intellectually, but emotionally, trading changes forever. You stop chasing signals. You start reading rhythm. You begin to see what most traders never see. Time windows when the probability of reversal is higher than normal. It's like tuning into a hidden radio frequency in the noise of the market. Now, here's the part that made me pause when I first studied it. Gann didn't just look at time cycles on charts. He looked at your own time cycle as a trader. He believed every person has their own vibrational rhythm, their own emotional loop of confidence, fear, greed, and doubt that repeats on schedule, whether they're aware of it or not. So while the market has external cycles, you have internal ones. And the greatest traders, Gann believed, are those who align their inner cycles with the market's rhythm. That's deep. And if you really think about it, it explains why two traders can look at the same setup. One sees opportunity, the other sees danger. They're not trading the chart. They're trading their timing. Now, before I go deeper into how Gann actually calculated these cycles, I want you to do something for me, because it helps push this message out to more traders who need to hear it. Tap that like button if you're feeling this. Subscribe if you haven't already, because this channel, Trading Psychology Lab, is where the market meets the mind. And drop a comment telling me where you're watching from. I love seeing traders from around the world learning together. All right, back to it. So, Gann's obsession was with geometry and time. He would take historical market data and mark every major high and low. Then he'd measure the days between them. He noticed that major market turns often occurred at fractional divisions of a full circle, 360 degrees. For example, a 45 degrees movement in time, 1/8 of 360 degrees, often aligned with short-term corrections. 90 degrees, a quarter circle, often brought bigger pullbacks or trend changes. 180 degrees, half a circle, marked major reversals. And a full 360 degrees rotation often brought complete market cycles back to their point of origin. That's why he'd say, every movement in the market is related to the completion of a cycle in time. He used this principle to build his time cycle charts, grids where each angle represented a division of time, projected into the future. He'd take the date of a major high, add 45 days, 90 days, 180 days, 360 days, and mark them on his chart. Then he'd watch. And over, price would react near those dates, sometimes by a few days, but often within the exact window. Was it coincidence? Maybe. But when you see it happen over decades in multiple markets, you start to question whether randomness really exists. And Gann didn't stop there. He aligned his cycles with planetary movements, not as astrology, but as astronomical timing tools. He noticed the 90 degrees and 180 degrees planetary aspects often lined up with market highs and lows. To him, it wasn't superstition, it was synchronization. He saw the world as one grand oscillator. From the spinning of planets to the swings of price, everything vibrated to the same universal beat. Now here's where modern traders go wrong. They look at Gann's work and think it's too abstract, too mystical. But Gann's brilliance was that he turned philosophy into practical timing rules. He never traded on belief. He traded on probability windows derived from time. And if you strip away the mysticism and focus on the principle, it's still relevant today, because every trader has seen it. Markets peak in cycles. Emotions peak in cycles. Even volatility peaks in cycles. We call it seasonality, sentiment rotation, mean reversion, but Gann called it what it really was, the law of time. The truth? Gann wasn't predicting the future. He was measuring rhythm. And that's something every serious trader can learn to do. Because when you start seeing the market not as random noise but as time-based energy, you stop reacting and start anticipating. You stop fearing pullbacks and start understanding where they fit in the cycle. You stop overtrading because you know when the time window is not in your favor. That's what made Gann different. He wasn't just trading charts. He was trading time itself. Now let's go deeper, because this is where Gann's method stops being mysterious and starts becoming practical. Everyone loves to talk about his geometry, his planets, his square of 9, but very few ever understand how he actually used it. It wasn't random guessing. It was structured, measurable, and terrifyingly precise. So here's the truth. When Gann talked about time cycles, he didn't mean astrology in the way most people think. He meant measurable repetitions in market behavior, intervals between highs and lows that could be plotted like beats in a rhythm. And to find them, he started with a simple rule. History repeats itself because human nature never changes. That was his foundation. He didn't need a computer to calculate volatility or correlation. He had human emotion, repeating endlessly through greed and fear. He measured time between panic and euphoria. And what he found was astonishing. Certain lengths of time repeated again and again. Not perfectly, but close enough to matter. Here's what he would do. He'd take a major high, say January 10th. Then he'd count forward 30 days, 60 days, 90 days, 180 days, 360 days. Each of those dates went on his chart. Then he'd do the same from a major low. And if both sets of timelines, from highs and lows, started to cluster around the same future date, he'd mark it as a time cycle convergence zone. Those were his windows. Moments in time where probability bent, where something was likely to happen. Not guaranteed, but statistically rhythmically likely. And that's the key. Gann wasn't trying to predict the exact event. He was measuring when the market was ready for change. Price told you the direction. Time told you when. Now think about how powerful that is. Modern traders obsess over price, breakouts, trendlines, indicators, but they forget that the market moves not just in space, but in time. Every move has a duration. Every trend has an expiration. And when time runs out, even the strongest move collapses. Gann built his empire around that law. He'd sit down at his desk, ruler in hand, and literally count, day by day, week by week, marking cycles. 30-day cycles for short-term trades. 90-day and 180-day cycles for swing trades. 360-day cycles for major market shifts. He called these vibration points. And here's the shocking thing. These time intervals lined up perfectly with planetary motion, even though he never called it astrology. For instance, the Earth moves 1 degree per day around the Sun, 360 degrees in a full year. So when Gann plotted a 360-day cycle, he wasn't predicting with magic. He was tracking the Earth's rotation around the Sun, the very definition of time. He took that cosmic rhythm and projected it onto market data. And the result? Markets moved in sync. Crashes, peaks, reversals, all dancing to the same unseen metronome. Let me give you an example from his own trades. In 1909, Gann made over 260 trades in 25 days, 92% profitable. He didn't use moving averages or indicators. He used time counts. He'd identify the day when the last major high occurred, project forward 45 days, 90 days, and 180 days. And when price hit those windows and showed exhaustion, he took the trade. That's why he could say, with full confidence, when time is up, price will reverse. Now let's make this real for you. Open your chart, any market, any time frame. Mark a major top. Count forward 30 days, then 60, then 90, then 180. Notice what happens around those dates. Price doesn't always turn exactly, but often volatility spikes. Direction shifts. Something changes. That's not coincidence. That's rhythm. Now imagine layering multiple cycles, short-term, medium-term, and long-term, all intersecting on the same week. That's how Gann found major turning points months in advance. He called it time and price balance. He'd say, when time equals price, change is inevitable. And what he meant by that was this. If price has moved too far, too fast, but the time cycle hasn't completed, the move might continue. But if price has moved and the time cycle completes, that's when the reversal often hits like a lightning strike. He didn't chase setups. He waited for time and price to meet. That's what made his trades surgical. Now here's where this connects to psychology, because this is Trading Psychology Lab. And we go deeper than charts here. When you start trading with time, not just price, something inside you changes. You stop being impulsive. You stop fearing missing out. You start understanding that every move in the market has its own clock. And your job as a trader is to synchronize your decision-making with that clock. You stop fighting time and start using it. Think of how liberating that is. Instead of reacting to every candle, you're watching the rhythm unfold. A turn might come next week, not today, so you wait. You're no longer chasing the market. You're letting time bring the market to you. That's the mental mastery Gann had. That's what made him untouchable. Now let's talk about the actual math, the part most people never study deeply enough to apply. Here's how Gann mapped time to price using geometry. He believed 1 unit of price equals 1 unit of time. That's why he used the square of 9, a spiral chart that starts with 1 at the center and spirals outward in 360 degrees increments. Each number represents a price level, but also a time count. He'd take a market high, say at 100, and plot it on the square. Then he'd rotate 90 degrees, 180 degrees, 270 degrees, or 360 degrees around the spiral to find corresponding price and time points. When those degrees matched future dates, for example, 90 days after the last high equals 90 degrees rotation, he'd prepare for a reaction. If that date also lined up with historical cycle lengths, like 180 days from a previous low, that's when he'd act. He was literally plotting time as geometry. And this is the part that modern traders often miss, because we've replaced patience with algorithms. But algorithms can't feel time. They can measure volatility, but not rhythm. Gann could. He could sense when the market was running out of time. And you can too, if you start training your mind to think cyclically, not linearly. Start by journaling your trades by time duration, not just profit. Ask yourself, how long did the move last before it exhausted? How many days between emotional peaks? When did you feel most confident? And how often does that feeling repeat? You'll start seeing patterns, not just in price, but in your own psychology. Because remember what Gann said, as above, so below. Meaning, the same cycles that move the markets move you. And when you learn to recognize both, that's when trading stops being chaos and becomes timing. Before we continue, if you're finding value here, take a second to like this video so YouTube knows this is worth spreading. Hit subscribe if you haven't already, and comment below where you're watching from. We've had traders from India, South Africa, the US, and Europe. Now it's your turn. All right, now you're probably wondering, how do we actually apply Gann's time cycles today? Because let's be honest, the market in Gann's era was slow, structured, and paper-traded. Today's markets are fast, emotional, algorithmic. But here's the surprising thing, the cycles still hold. Why? Because algorithms trade off human-designed rules. And humans haven't changed. We still chase greed. We still panic in fear. We still repeat our emotional loops like clockwork. So even in a world of high-frequency trading, Gann's time law still governs the emotional heartbeat of the market. That's why when you zoom out, weekly, monthly, yearly, you still see rhythm. Euphoria, fear, hope, denial, over and over. Like a song on repeat. And the traders who survive, the ones who grow their accounts steadily, they're the ones who don't just study charts, they study time. Now let's bring this down from theory into the real world. Because here's the thing most traders miss. Gann didn't just talk about cycles. He proved them. Publicly. Repeatedly. You can go back through history and see it. He called market turns that shouldn't have been possible to predict. Not once or twice, but over and over again. And that's when Wall Street started whispering his name like it was magic. In 1909, the Ticker and Investment Digest ran an article titled William D. Gann, A Prophet of the Markets. They documented a real-time experiment, 25 trading days, 286 trades. He was right on 92% of them. They watched him call highs and lows to the exact day. One reporter wrote, "If we could publish the basis of Mr. Gann's forecasting method, the world would have a new science." But Gann never revealed it fully. He only left clues, scattered across his books, his charts, his mysterious master time factor. And that's what makes his legacy so fascinating. Because every trader who's ever studied him ends up asking the same question. What was Gann really seeing that others couldn't? Let me tell you what I think. He wasn't predicting random prices. He was mapping the rhythm of human participation. He understood that markets are built on cycles of collective emotion. Hope, greed, fear, despair, repeating through time. And when those emotional cycles synchronized with his measured time cycles, he knew something big was coming. It's like a weather forecaster seeing two pressure systems collide. He couldn't tell you the exact wind speed, but he could tell you a storm was near. That's what Gann did. He read time the way we read candlesticks. Now, you might be wondering, how could he forecast decades ahead? Simple. He used time harmonics. He discovered that small cycles are often multiples or fractions of larger ones. A 30-day cycle fits 12 times into a 360-day cycle. A 90-day cycle fits 4 times. A 7-year cycle often resonates with 14, 21, or 28-year intervals. That's why he could take a market high from 1907 and project 20 years forward to 1927. And know, somewhere around that window, a massive shift would come. 2 years later, in 1929, it did. Now, to be clear, Gann wasn't claiming supernatural power. He was observing that time behaves fractally. The same rhythmic patterns echo on every scale: intraday, weekly, monthly, generational. And here's where it gets almost spiritual. Gann believed that everything that has a beginning must have an end. That every move in price, every trend, every human endeavor follows a cycle of birth, growth, maturity, and decay. Just like nature, he saw markets not as machines, but as living organisms that breathe, expand, contract, rest, and begin again. And if you've traded long enough, you've felt that too. You've seen bull markets breathe life into every trader on social media. You've seen bear markets strip that confidence bare. And then, you've seen the quiet rebuilding, that slow, patient accumulation before it all starts again. That's the rhythm Gann traded. Now, what makes his predictions even more haunting is how accurate his time windows were. Let's go through a few. The panic of 1907. Gann forecasted a recovery cycle within 90 days. It happened. The wheat top of 1909. He called the reversal almost to the exact date. The 1929 crash. He warned of a time cycle convergence years before, saying markets were due for a major top and long-term correction. World War II recovery. He mapped a 20-year cycle from the 1921 low, projecting a major uptrend beginning in 1941. Again, right on time. How could anyone time that so accurately? Because he wasn't looking at events, he was looking at time symmetry. He didn't care what triggered it: war, inflation, innovation. Only when the vibration of time was due to change. That's what most traders can't wrap their heads around today. We try to tie everything to news, to narratives, to headlines. Gann ignored all of that. He trusted the geometry of time more than the noise of opinions. And here's what's crazy. Even if you open a chart right now and apply his basic counts, 90, 180, 360 days from any major high or low, you'll see the rhythm still holds. It's like the market has a pulse you can't hear until you slow down enough to measure it. That's the kind of patience that separates professionals from gamblers. Now, let's talk about how you can modernize this. You don't need to be a mathematician or a mystic to apply Gann's principles today. You just need structure. Start simple. Identify a major swing high or low on your chart, something obvious. Use a date calculator or TradingView's bar counter to mark 45, 90, 180, 270, and 360 days from that point. Highlight those dates. Watch what happens around those windows. You'll begin to notice, not always exact reversals, but energy shifts. Momentum slows. Volatility spikes. Volume rises. Something changes. Then take it one step further. Overlay multiple time cycles from different swing points. Where they intersect, that's your Gann time cluster. Those are your watch zones. You don't trade blindly off them. You prepare. You get still. You wait for confirmation. That's how you start trading like Gann. Not predicting, but anticipating. Now, here's where psychology sneaks back in. Most traders can't wait. They don't have the emotional discipline to let time do the work. They need action now. They need constant confirmation. But Gann understood that markets reward patience, not excitement. He said, "Time is the most important factor in determining market movements. I have devoted most of my life to its study." He wasn't exaggerating. He would literally sit with charts for hours, counting days, marking angles, mapping the unseen. And that's what I want you to think about the next time you're tempted to jump into a random trade. Ask yourself, has time matured? Because if the time cycle hasn't completed, even the perfect setup can fail. And when time is ready, even an imperfect setup can explode in your favor. Now imagine if you applied that level of awareness not just to charts, but to your life as a trader. Your emotional cycles, your confidence cycles, your burnout and recovery phases. Everything follows rhythm. That's what Gann was really trying to teach. Not just how to trade the market, but how to live in sync with time itself. You can't rush it. You can't fight it. You can only align with it. And when you do, trading stops feeling like chaos. It starts feeling like music. You begin to feel when something is about to shift, not from fear or intuition, but from the quiet recognition of time itself. Before we move on to the final part, where I'll reveal how Gann actually combined his time cycles with price and geometry to pinpoint exact reversal zones. Do me a favor. If you're still here, you're clearly serious about mastering the mind of trading. So take a second to like this video. It helps the algorithm find other traders like you, the ones searching for deeper answers. And if you haven't yet, hit subscribe to join our community here at Trading Psychology Lab, where the market truly meets the mind. And drop a comment below. Tell me where you're watching from. I love seeing our global family of traders. All right, now let's go one level deeper. Because Gann didn't stop with time. He used time and price together, like two sides of the same coin. And when those two aligned, he said, the future becomes visible. That's what we'll explore next. How he combined geometric price projections with time harmonics to forecast turning points decades ahead. And how you can use that same timeless principle, without mysticism, to bring order to the chaos of your own trading decisions. You see, by now you've realized something. Gann wasn't just trying to make people rich. He was trying to make them aware. Because the greatest traders he ever studied weren't just masters of price, they were masters of timing. And timing, in Gann's world, wasn't luck, it was law. He once said, when time is up, price will reverse. Simple words. But if you meditate on them, they change the way you see every chart, every market, every move you make as a trader. Because what he meant was, every trend, no matter how strong, has a built-in expiration date. Every rally carries the seed of its own decline. Every crash carries the seed of its next recovery. The market breathes. And if you learn to listen to its rhythm, you stop fighting it and start flowing with it. Now, here's the truth most people can't handle. Gann didn't just draw lines and numbers, he lived by cycles of time. He believed everything that ever happens in the market has happened before and will happen again. Because time doesn't move in a straight line, it spirals. That's why his charts looked so strange, with squares, circles, and intersecting diagonals, because they weren't maps of price, they were maps of time. He once demonstrated his method publicly, predicting market highs and lows to the exact day. Reporters were stunned. Some called it witchcraft. Others said it was pure math. But Gann just smiled, because he knew those who see only the price will never understand the market's pulse. And here's the secret almost nobody today understands about Gann's method. It wasn't about predicting the future. It was about understanding the rhythm. So when the rhythm repeated, you were already standing in the right place at the right time, doing the right thing. He called it time and price balance. The idea that price is just the visible tip of an invisible cycle moving through time. When time and price meet, something always happens. Always. That's why he drew time squares, equal divisions of time and price, because he knew when both aligned, the market had to react. Sometimes it exploded. Sometimes it reversed. But it never ignored time. Think about your own trading. How many times have you seen a perfect setup, a breakout, a clean pattern, and it fails instantly? You call it manipulation. You blame liquidity. You blame the market maker. But what if you were just out of time? Gann students learned this lesson the hard way. They'd enter perfect patterns, but if the time cycle wasn't ready, they'd get crushed. Gann would just smile and say, you were right in direction, wrong in time. It's the most painful truth in trading. Being early feels just like being wrong. But Gann turned that pain into precision. He'd divide time into segments, 30 days, 60 days, 90 days, 180 days, 360 days. He'd track these intervals from major highs and lows. And when one of those cycles lined up with key price geometry, he knew something big was coming. And it worked. He called the 1929 crash, when few even believed a bear market was possible. He called the 1932 bottom when the world was drowning in despair. He timed commodity turns, rail stocks, even agricultural markets, with almost supernatural accuracy. But if you asked him how he did it, he'd tell you this. I don't predict. I calculate. See the difference? Prediction is guessing. Calculation is awareness. And awareness is what separates the gambler from the master. Now let me challenge you here. If time is the invisible structure behind every price, how are you mapping time? Most traders only map emotion. They chase fear, they chase greed. But the pros, the real pros, they map cycles. Start small. Pull up your chart. Find a significant top. Now count forward 30 days, 60 days, 90, 180, 360. Notice what happens around those points. You'll see subtle reversals, rhythm shifts, volatility spikes. That's not coincidence. That's time whispering. The market doesn't reward speed, it rewards rhythm. And when you sync your trading to the rhythm of time, you stop needing to predict anything. You just listen. Because Gann's greatest lesson wasn't geometry or numerology, it was humility. He understood that man doesn't control the market, he participates in it. He aligned himself with natural law, the same way the moon aligns with the tides. He used time cycles not to dominate the market, but to dance with it. And that's the real secret no one can teach you. You have to feel it. You have to live through enough trades, enough cycles, enough highs and collapses, until you start sensing when a move is out of time. That's when you stop being the trader who reacts and become the trader who anticipates. And once that happens, everything changes. Because you stop fearing losses. You stop forcing trades. You stop chasing trends that have already lived their time. Instead, you start waiting, not with anxiety, but with confidence. Because you know time will bring you another setup, another cycle, another chance to align with the rhythm. That's what made Gann immortal. Not his charts, not his mystique, but his discipline to study time when everyone else was studying price. And if you truly understand that, you'll start to see the market the way he did. A breathing organism of cycles, a living calendar of emotion and geometry, a mirror of everything we are as humans, repetitive, rhythmic, and beautifully predictable when you zoom out far enough. So next time you open your charts, remember this. Price is noise. Time is truth. And when time is up, price will always tell the story. Before you go, if this message resonated with you, if you felt something shift in the way you see the market, then I want you to do 3 things right now. First, subscribe to the channel, because this is where the market meets the mind. Second, drop a comment below. Tell me where you're watching from. I want to see how far this message travels, because Gann's ideas weren't just for one country or one market. They were universal. And third, share this video with a trader who's chasing price but ignoring time. You might just change the way they see everything. Because in the end, that's what Gann wanted, to awaken traders to the hidden heartbeat of the market. And once you hear it, you can never unhear it. This is Trading Psychology Lab, where the market meets the mind.